every single major government in the world to refinance all of their debts on this 3 to 5 year sector. And so they all did it. And what it did was force the business cycle into this 4-year cycle. And then all the asset prices are all correlated. Whether it's tech, whether it's Bitcoin, whether it's the economy itself, it's all driven by the same cycle.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Let's join Raoul Powell in a conversation about these topics and more.
Bitcoin had a great year in 2023 against most people's expectations, because spring is the time the shoots come up. Then you start transitioning into summer, which is this year, which happens to be the election year, which is when really the debt starts getting refinanced and they have to start using liquidity to finance it, because there's not enough GDP growth to pay for the interest on the debts. And so they keep rolling forwards these debts and they keep monetizing the interest payments, which is this debasement of currency that happens at about, on a globalized level, 8% a year. They're debasing currency. And then next year will be macro fall, and then eventually the cycle tops out and we repeat it again because it's based on the debt refi cycle.
Right.
That this debasement of currency of 8%, there's two ways of looking at it. You can say, rightly so, we're being robbed of our future wealth because your future self is getting poorer because you can afford less assets with your income, because income doesn't go up, the assets do because of the debasement. Or the other way is you can say, I'm paying an 8% put option fee on the entire system not breaking, because that's also what they're doing. Because 8%. They need to refinance the debt. They need to not let asset prices go too far down. So we can talk about that, but it's another way of looking at it. And you're like, would you pay 8% a year to have the entire system not break? Maybe. GDP keeps falling over time. And you can forecast it into the future. It's just the births, deaths. And it gives you 30 years of understanding. And it's just telling us, unless something dramatic changes, which is technology, we're just going to keep dragging down GDP forever. And we're seeing it worse. Older populations, Japan, China, most of Europe, they're older than the US because they had less immigration. What you find is their GDP keeps shrinking. Australia, on the other hand, has a high immigration rate, as has Canada, and they tended to do better because of the immigration rate. Because really, GDP growth is driven by population growth, productivity growth, and debt growth. Well, most people tend to err towards it's all going to blow up. I'm like, show me how. If you can debase a currency, a global reserve currency, how's the assets going to collapse? You can't. It's like the Venezuelan stock market goes a lot in Bolivar terms. In dollar terms, it goes down.
Right.
That's debasement. So I'm like, I don't think that is the outcome. What I actually think of the outcome is, remember that magic formula, GDP growth plus productivity growth plus debt growth. Right, debt growth is stopped. It's just servicing of old debts.
Financial expert Robert Kiyosaki warns about the U.S. accumulating $1 trillion in debt every 100 days. He advises investing in Bitcoin, gold, and silver to safeguard against potential economic collapse and banking system failures. The U.S. national debt has reached $35.256 trillion, growing at a concerning pace. Kiyosaki emphasizes the importance of investing in Bitcoin, gold, and silver. Bank insolvencies can be hidden, making FDIC insurance critical but insufficient. Kiyosaki highlights the fragility of the current economic and banking systems. He stresses the need to protect savings from the bankrupt money system. Bitcoin has managed to stay above $64,000, but weakening demand and a decline in large investor holdings suggest potential price fragility. Without stronger demand, a sustained rally seems unlikely. Bitcoin's 30-day demand growth dropped from 496,000 BTC in April to 25,000 BTC. While holdings growth has fallen to 1%, down from 6% in February. Bitcoin briefly touched $64,000 on August 23, but struggled to hold above it. Jerome Powell's remarks hinted at potential rate cuts but lacked a clear timeline. The $64,000 support level remains fragile, with demand too low to sustain a rally.
GDP doesn't mean anything anymore. What does any of this mean? So if you've got productivity going up because of energy costs, and you've got infinite humans, or humans in inverted commas, then that changes everything. Now, people are going to say, oh, Raoul is smoking crack, this is all weird. This is exactly what happened after World War II. So let me talk you through that, because it's really important for people to understand. World War II, so the crash of 29 was the system failure, same as 2008. World War II finished 1945. This was roughly like the pandemic, because the global economy had stopped. Everybody was out of the economy because they were locked up at home, or they were in the services back in the 40s. They all come back into the labour force, buy stuff because they've been out of the consumption for ages. The factories aren't ready. They're not able to deal with it. There's no supply chains. Prices rocket in both equations. 20% back then, 9.5% this time around. Okay. Then what happens is inflation fell, actually went negative soon after the first inflationary push. Then what the central banks did then, the Fed, was yield curve control, which is money printing, to service the debt. And they ran that policy plus fiscal spending to generate new cars, new factories, all of that boom of the 50s that went into the 60s. Now, the other problem they had is, much like now, we'd lost like 20% of the entire male population of the Western world from warfare, 2 wars. So you had to replenish population, or GDP couldn't grow. What happened? The baby boomers. So by the time they got into their 20s, it was the 1970s. They all go into the labour force at the same time, start buying a house, a car, a suit, a tie, everything. It creates a huge inflation because we had all of this consumption. But that, over that period from about 1947 to about 1970, it was perfectly 4-year cyclical. It was exactly the same thing. The stock market did 900%.
Solana's price jumped by 10% today, fueled by Federal Reserve Chair Jerome Powell's dovish remarks, which sparked expectations of imminent interest rate cuts. Traders are now bullish on Raoul, anticipating further price gains. Mark Zuckerberg and Daniel Lake advocate for open-source AI in Europe. The two tech leaders believe that open-source AI can drive innovation and give Europe a competitive edge. However, they warn that fragmented regulations and uneven enforcement are hindering progress. They urge Europe to streamline regulations and focus on retaining talent to fully capitalize on the potential of open-source AI. As the U.S. election season heats up, Bitcoin finds itself once again in the political crossfire. From Washington, D.C. to international capitals, this digital currency has become a talking point, with politicians on both sides of the aisle either championing it as a revolutionary financial tool or condemning it as a threat to economic stability. But as Bitcoin continues to evolve, it's clear that 2024 is shaping up to be more than just an election year. It's becoming the Bitcoin election year. Economist and gold advocate Peter Schiff has cautioned about the U.S. dollar index falling substantially, triggering a U.S. dollar crisis, crashing the economy, and sending consumer prices and long-term interest rates soaring. Schiff further warned of higher inflation and stagflation, impacting consumer prices and interest rates. He criticized the Federal Reserve's current strategies, cautioning against rate cuts. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.